Iran's no longer thinking about the Mediterranean and going through, and they're thinking about themselves. They're having riots all over.
Are they enriching their uranium like the reports say?
If they do, they're going to have a very big problem.
All right, first, folks, let's check the price of oil. Still over 73, close to 74. But our next guest thinks $80 could be right around the corner. Joining us, John Hofmeister, former Shell Oil president. John, welcome to the show.
Thank you, Charles.
All right, we're near a key resistance area, right? We got to this 73-ish area earlier in the year, and then we came down quick. I mean, very, very hard. You see where the rigs come online. You see where OPEC starts to talk about increased production. It seems like the marketplace and the producers react really quickly, which makes $80 seem like it could be a bridge too far. How we get there?
Well, the real problem, the underlying problem, is the fact that from 2014 to 2018, the industry globally deferred about $500 billion of capital investment. Meanwhile, demand has continued to increase. So with the lack of capital investment over such a sustained period of time, we're multiple years away from meeting increased demand, which is going to drive price. And this is not something that's going to be fixed with a phone call between our president and the King of Saudi Arabia. This is an underlying problem that's going to continue for some time to come.
What was the reason for that? What was it when Saudi Arabia opened the spigots? And it was my estimation they declared war on the U.S. fracking miracle, and I think they lost. But how do you explain that big gap in capital expenditure?
Well, there wasn't enough money to both produce and spend for new exploration. So the money that was coming in from the lower oil price basically paid the cost of production, but it didn't pay for the costs of capital expansion for new supplies. And so we're about 4 years away from really cracking open reservoirs that could have been cracked open, the last 3-4 years. And so it's going to take time to catch up. We will catch up, but I think the oil price is going to grow as a consequence of continuing global growth and demand for oil. The alternative, of course, is natural gas.
Sure.
And natural gas is not a quick fix, but it's a fix over time where we really have to get off the oil volatility for the sake of sustained economic growth. I think President Trump has a marvelous opportunity in front of him to begin shifting to a natural gas supply for transportation fuel, which can change the game entirely forever. Frankly, forever meaning the next century, of having low-priced natural gas, clean natural gas, as a more of a primary transportation fuel.
Joe, we've been hearing that for a long time, right? Boone Pickens, I think, was a big proponent of that. And we don't have much time left, but wouldn't that even be more expensive than than some of the other lapses that we've seen in CapEx spending?
No, I think there is such abundance of natural gas, and there will continue to be an abundance of natural gas, that we actually will see a shift that will just be market-driven. But what we need are a few market enablers, which can be provided by executive order or EPA re-regulation. Okay. And it doesn't take an act of Congress to do that.
John, thank you very much. Always appreciate it.
Thank you, Charles.